Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, August 11th at about 1 p.m. Eastern. Well, the Dow is a little bit positive right now, but basically Wall Street is falling so far today as rate-sensitive technology and growth stocks dropped after hotter than expected producer prices data for July sent U.S. bond yields higher. U.S. Producer Price Index, that we call it the PPI, climbed 0.8% in the 12 months leading to July, up from a 0.2% rise in the previous month as service costs increase. Economists had expected a 0.7% gain. And on that note, let's go on to three charts that could give us some insight into the week to come. As we always do, we're going to first look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. And it's important for traders especially to follow the SPY or the S&P 500 because it is, we could call it one of the leading indicators. It is the index of the broader market. And it kind of gives you the mood and manner of the entire market itself. Now, when I captured this chart today, the SPY was trading at $444.69, just 7% below its all-time highs that came in at $479.98 in January of 2022. So we know here, back here in March, that after the March low at $380.65 earlier this year, we can see how from there, and we know that the benchmark gained strength. It moved up above the black line, the 200-day moving average. It climbed over the 20-day line, the red line, over the 50-day moving average, the green line, and then started consolidating along the 50-day moving average, this green line. We watched it consolidate into, of course, the debt ceiling talks. It walked along the 50-day moving average, then broke out in May into a sustained uptrend. So we can see how it broke up from the 50-day over the 20-day, then kind of used that to walk along on, then broke up higher here in May into a sustained uptrend, and then it traded at quite a premium to the 50-day moving average, moving up here to the June high at 423, then fell back and used the 20-day moving average from June on, basically still rising in an uptrend, walking up this 20-day moving average on July 27th, and it moved up again at a premium to its 20-day. It gapped up right here. See this candle here on July 27th. It gapped up to open at $459.44 and kind of wrestled around there for a few days, then slipped lower. We knew that so if it's too good to be true, it is. On that note, the SPY fell back down in the last couple of weeks below its 20-day moving average, back down here to its 50-day moving average. So it's again trading on top of that 50-day moving average. The 50 days coming in here at 442.69, and again the SPY right now is at $444.69. So the 50-day moving average, actually, it's been talked about a lot on CNBC today, is generally considered to be an important indicator, mainly to technical analysts like myself and perhaps like you, but also in the fundamental world. The 50-day is generally accepted at least as a line of measurement, something that can give us an idea of we call it the strength or the weakness of price. And when price on any asset that we're looking at is trading above the 50-day moving average, it's generally considered to be like you could almost think of it as a midterm trend line. When price is trading above the 50-day moving average, it's considered to be, we could say, healthier than if it's trading below it. And we like to see the SPY above the 50-day moving average is generally considered to be a more bullish market. So with that in mind and seeing where it is, we can say where's resistance if price starts moving higher. We can see resistance again back up here. We're going to call it at this highs. We're going to call it 460 to give it an easier way to remember it. Then we have more potential resistance up here. We've got like a gap here, and we've got the 20-day moving average here coming in at 451.75, so 451, 452. We have price resistance should the SPY start up, potential, we should say potential resistance. Then we're down here again at the 20-day at 451.75, as I just said. Again, we have support, potential support at the 50-day moving average, again at 444.69. Then we have more potential support here at 447. So that's down a little ways. And then we've got another line here of potential support at 431. So should the SPY start to fall, we do have these points of potential support here, price support, and on the case of the 50-day indicator support, moving average support. Please do keep in mind as we move through this time in August that the definition of an uptrend is price making higher lows and higher highs. That's the definition. When I get into a corner, kind of like I would consider this chart to be right now, I always like to go back to the basics, and the basics are, what if I said, okay, I am staying in this stock or this ETF as long as it's in an uptrend, or as long as it's trading above the 50-day moving average. Whatever I use for criteria, I have to go back to those very, very simple ways of thinking about things that can also be the most profitable ways to keep myself straight. So the definition of an uptrend is higher lows and higher highs. Now in that case, the lows are the most important. So while the SPY is still in an uptrend on a daily chart, we're starting to cut it a little bit close here with the fall down to 444. So with that said, you may want to check your protective stops on long positions and make sure they're firm. Our next chart is the daily chart of the QQQ. Invesco QQQ represents the top 100 non-financial companies by market capitalization in the Nasdaq 100. Of course, the Qs include companies like Alphabet, Amazon, Nvidia, Microsoft, AMD, Tesla, all those big guys, movers and shakers. Now, when I captured this chart today, the QQQ was trading at $365.28. It is now about 11% below its all-time highs in November 2021 at $408.07. So we've lost 71 cents. So we've lost a little altitude here, as you can see. Now it's trading beneath the 20-day moving average that's coming in at 376.73. And the Qs fell below today, fell below their 50-day moving average. So the 50-day moving average, the green number here is coming in at $369.04. The Qs are trading just below that. Now we know, look left on the chart with me here, please. We know that from since March, where these lows here were 285, it shot up to a high. It climbed up over this March low here. It jumped up. The Qs jumped up, moved above the 200-day moving average, the 50-day moving average, and the 20-day moving average in a matter of about 3 days. So it was a really nice move. And started riding the 20-day moving average, like the SPY did, using it for the most part, except for a couple of days here, using it as a kind of a trend line here, and shot all the way up, rose up, broke out in May, then started trading like the SPY did at a premium to its 20-day moving average, meaning trading above it, not on it, but stretched out above it. Now, angles here can be pretty telling in the stock market, and when you get an angle this steep, yes, it can go on for several weeks or a month, but at some point, just like everything in the world, it has to give, and it did move up here. The Qs moved up to a high of $372.85 on June 16th. It fell back down to the 20-day moving average, used the 20-day for support again, then rose up to an intraday high, and the SPY did the same thing. On June, well, the QQQ did it on June the 16th. It rose up to a high here of 370, where am I here? A June high at 372.85, then back down to the 20-day, then shot up to July high at 387.98. That's where I'm trying to get here. Then after that, the party, at least for the last month or so, was over. It came down, walked along the 20-day moving average, then rolled down below the 20-day moving average, kept on falling in the past couple of weeks below the 50-day moving average, and again, right now is at $365.28. So we've got resistance at highs here up. If we say, well, where could it hit if it's going to start back up? We've got resistance at the most recent high here at 388, at 370, at 385, then the 20-day moving average at 376, and sadly, it's below the 50-day moving average at 369. So if it starts up, it's going to have some work to do. We do have price support here. Well, we've got today's lows at 365. We've got price support here from June at 357 and potential price support at 348. So, but again, higher highs and higher lows, and it looks like we're kind of negotiating these lows here as the Q has moved again below the 50-day moving average. To stay bullish, of course, we'd like it to move back up above that line. So again, please check your stops and know that August can be a very cranky month. For our last price chart today, we're going to look at a daily chart of the iShares U.S. Broker Dealers and Securities Exchanges ETF. Boy, that's a mouthful. Symbol IAI. It has 25 holdings. Top holdings include Morgan Stanley, Goldman Sachs, Charles Schwab, the CME Group, and the CBOE Global Markets. Those are both commodities. Now, when I captured this chart today, the IAI was trading at right here, can you see it, at $95.67. Now, you can't see it on this chart, but its all-time high, its record all-time high, came in at $116.25 in November of 2021. Okay, so I just wanted you to have that number in your mind. We made a high this year in February, back here where you can see my mark, at $105.62. Then when we had the news of the regional bank failure, the one that was so noticed in California, naturally this particular ETF dropped dramatically down to March intraday lows to $84.97. After that, it rallied pretty quickly, rallied back up to $93 here in April, then fell down to, hold on here, retested the former low, that's what I wanted to say, came back down to the former low here, right around 84 or so. Then moved up and kind of sidestepped here between, call it 86 to 89 in May, consolidated here, then rallied up to 92 here in June, back up above the 20-day, the 50-day, up to 92 in June, then back down to 88 in June, but this is a higher low, and you know that's what we look for, a higher low. Then up to a recent high in July up here to $99.74. So this was quite a jump up through the 50-day, the 20-day, the 200-day, up, and then came back down to where it is now, again, at the moment trading at $95.67. We are trading here just below this 20-day moving average. Right at the moment, the IAI is sitting atop the 200-day moving average. And of course, the 50-day moving average is down below it, as you can see. So in the coming week, if the IAI can stay above the 200-day moving average, and especially the 50-day, I'll give it a little room here, but especially if it can stay above the 50-day moving average, which is coming in at $93.06. So just call it 93 if you want. And if in the next week the market stays relatively positive, I may add a small position of the IAI, and I say small because it's August and you never know what's going to happen. I may add a small position of the IAI to my trading portfolio, and I'm going to have my stop in here at 92. If and when the IAI rises and closes above the 100 mark right here, which is right near the prior high, just above this prior high here, of course, if it closes above that, I'm going to add to my position, and of course, by then my stop will be a trailing stop. So you may want to keep an eye on the IAI in the coming week. Now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, trend trade, bottom trade, or more, check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to the link on this screen or simply clicking on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.